Welcome. I am Stephanie Dupuy with Dupuy Team at Keller Williams West Sound in Silverdale, Washington. And this webinar, we are going to go walk you through the buying process to purchase a home. This is a basic how-to guide, yet you're going to also hear some things that may be very helpful for you that you may not hear elsewhere or find online. In this webinar, we will cover the homebuyer orientation, the pre-approval, the home search, inspection process, appraisal process, and closing, what happens up prior to closing and at the actual event. All right, the homebuyer orientation. The orientation simply is when we sit down, the agent and the buyer sit down and take a look at what the homebuyer needs. What are the homebuyer's expectations? Educate the homebuyer on the home buying process. Go over the cost of purchasing a home. So, not every agent does a home buyer orientation. I feel they're very important. It really sets the stage for a successful transaction for the home buyer. Obviously, we all perform better when we know what's coming up and what's going to happen. If you're not well, let me back up. If you are asked to participate in a home buyer orientation, go to it. It's going to be really helpful for you. You're going to be glad you did it. And if you're not asked, I would try to figure out how the agent's finding out what I need as a home buyer. How are they determining what homes we're going to look at outside of a 3-bed, 2-bath? There's much more to it than the number of beds and baths and the location and the price. So I would try to investigate that, and if an agent does ask you to meet with them in person, they're probably going to do a home orientation type situation, and that's a good sign. So take them up on it. So let's take a look at the home buyer needs section of the home buyer orientation. This is where you and your agent sit down and take a look at what you need as a buyer. We use this questionnaire. We like to ask the questions because we've learned that, these questions are simply a starting point, and they often lead to other questions, and by both the agent and the buyer. The goal is to learn why the buyer is buying. That's important for your agent to know. And because it can change what type of home you look at, the area, and your agent may have some helpful suggestions due to your particular situation. Obviously, you're going to see here. This is the questionnaire we use. You're going to see, are there any special features you need? Any deal breakers? Obviously, we don't want to show you houses that have your deal breakers as part of them, and we want to show you the homes that have the special features if we can. So then there's the basics. Go over the basics: bedroom count, bathroom count, style, that type of thing, location. You should be asked whether you own or rent, and it's important to know, if you're a renter, for example, if you have a lease situation that needs to be addressed, that might affect timing. Same with selling a home. So those are important questions. They have, they're designed to help the buyer design a path for the buyer through their purchase process that's going to keep them moving forward productively. There's some questions down here about who the decision makers are. Obviously, we need to know who those are. And then the contact info down here is for when an offer is written, if you get to that point, that we have the correct information, and we can communicate that to escrow. Okay, here. So in the homebuyer orientation, we always cover the cost of purchasing a home. Oftentimes buyers know that it costs money, but you really need to know what it's going to cost so that you can prepare financially for the event. You need down payment money. We do have zero down loan programs. VA, we see a lot of VA buyers, and we work with a lot of VA buyers in our area, and those are zero down loans, and there are other zero down loans, USDA. We've seen some zero down conventional loans. So that's something you need to talk to your lender about if you're interested in that. Typically, down payment is between 3.5% to 20%. The other thing you're going to need money for is earnest money deposit. An earnest money deposit is a good faith deposit that you pay upon mutual, which means at the point that you go under contract to purchase the home. It's typically 1% or more of the home's purchase price, and it goes into escrow. And as long as you stay within contract and follow the rules, that earnest money stays with you as a buyer. You can put it towards your closing costs or down payment. And if money isn't needed for that, you'll get it back at closing. Another expense is the home inspection. Typically, these average around $400 to $500, but they can be as high as $700 to $800 depending on your situation and the size of the home. A home inspection is a general home inspection where an inspector examines the home, looks at both the structure and the systems of the home, and gives you a report. We also recommend a septic or sewer scope. The prices on these are rising fairly quickly. The septic and sewer scope, if you're on septic, you're going to need to either scope the septic with a camera or have someone do a testing of the system to make sure that the septic system is working like it is. A lot of buyers confuse the county OSS, which is on-site septic system or sewage system inspection that the county does, as the septic being inspected. And our experience is that that is a very kind of surface level inspection, and there's still a lot of problems that can be in a septic. And so a septic scope is really good for a buyer because you learn about your septic and you make sure that it's in the operating condition that's it's going to serve the purpose that it needs. Sewer scope sends a camera down the sewer line to make sure that the sewer line is operating correctly. Well worth the money, can save you tens of thousands of dollars if a problem's discovered. And we do. We run into failed septics and we run into broken sewer lines, so they're needed. Closing costs. Typically closing costs, the buyer pays their own closing costs, seller pays their own closing costs, and the buyer's closing costs can range between 2.5% to 3.5% typically. So those are the basic costs associated with purchasing a home. Okay, in this next section, we are going to go over the pre-approval process, what it is, how to select lenders, and some other stuff. All right, in this section, we're going to discuss the pre-approval process and what it means for you. So, what is pre-approval? Pre-approval is when a lender has checked your credit, verified your documentation, your financial documents, your loan application, and they approve you for a specific loan amount. So if you're purchasing a home for $300,000, the lender verifies your financial information to basically do all that they can to make sure that you can receive a loan for $300,000. So that process is called pre-approval. The result that we need and that you need as a buyer is you need to receive a pre-approval letter. And so typically it takes 24 hours to 72 hours or so to receive go through pre-approval and receive a pre-approval letter. Now, this next thing we're going to do is there's a difference between pre-approval and pre-qualification, and the two terms are often confused and used interchangeably, and they're very different, and the difference is important. Pre-approval is better, and pre-approval, as we said, means that your lender has verified your information. So contrast that with pre-qualification. Pre-qualification is simply an estimate of what you're able to get a loan for, and that is not as strong. Pre-qualification does not include any sort of verification. So when you receive a letter, you need to make sure you receive a pre-approval letter, not a pre-qualification letter. A lot of online lenders and national lenders will only issue a pre-qualification They do not issue a pre-approval until a home is under contract. And the problem with this is that if you are a buyer and you make an offer and it's in the top 2 offers that a seller is considering. So think of it from the seller's perspective. The seller is looking at 2 equivalent offers, except for one has a pre-approval letter, one has a pre-qual letter. Which one are they going to accept? Well, they're going to accept the pre-approval letter, the offer with the pre-approval letter. So pre-approval is important. Why do you get pre-approval? You need to prove to the seller that you can get the money for the house that you are making a purchase offer on. So this gives you the verification that you've got the money to buy the house. It's that simple. Whereas a pre-qualification letter, it's a maybe. It's just, you know, a lender taking someone else's word, and that's not strong enough for most sellers to take their house off market and accrue the expenses of maintaining a home if it's not going to sell. So the next one, how do you get a pre-approval letter? It's really simple. You simply call a lender and meet with a lender. We recommend meeting with 2 to 3 lenders at minimum. It's free to meet with lenders. Go see them. And you give them your information that they ask for, and they're going to run your credit, and they're going to verify your financial data. So that's how you get a pre-approval letter. It's that simple. The lender takes care of the rest of it. How do you know if you have a good lender? So the first thing is the lender you choose is a personal choice. And, you know, most agents have recommendations or a referral list. I shouldn't call it a referral list, just a list of lenders they know to be reliable and of quality. That's a good place to start. Bottom line, meet with 2 to 3 lenders and choose the ones choose the one that works best for you. Qualities of a good lender, in my opinion, are lenders that close on time. That's an often overlooked item. You want your loan to close on time. Most buyers go in thinking that they've got a good lender if they're getting good rates, and the rates aren't everything, and here's why. If you are under contract to buy a house, the closing date's set for May 23rd, and you have to be out of your rental by May 31st, and the lender doesn't get the loan closed on time, and it needs to be extended to June 5th, so now your closing date for your home is after your move-out date for your rental. So where are you going to live for a week? And you're either going to have to pay for a hotel, you know, camp on someone's couch, buy a tent, go camping for a week, you know, and so that could cost you money if a lender doesn't close on time, let alone the hassle and the heartache of it, the disappointment. The other thing that can happen, and we're seeing this more and more, is that if a home doesn't close on time, it ends up costing the sellers money. They may have another transaction in the wings that is dependent on you closing on the home sale with the seller. Plus, there's just holding costs. They may have to pay an extra mortgage payment. So guess who the seller asks to compensate for the financial loss that they're going to incur from a late closing? They're going to ask the buyer. So you may get a low rate or loan origination fee, something like that, some sort of deal that saves you $500, and then you end up with a late closing and it ends up costing you $600 to $1,500 or more, depending on the situation. So I always look for, I think, verifying that a lender closes on time consistently is good. They're never going to close every loan on time. Some things are out of their control, such as appraisers and buyer information, stuff like that. But the majority of their loans should close on time. The next category here, local lenders versus online lenders and national lenders. So we recommend using a local lender, and the reason is because most sellers prefer local lenders, and the reason why most sellers prefer local lenders is because local lenders tend to close on time more consistently. It's that simple. Closing on time is really important, and the reason local lenders are able to close on time more consistently is because they know the area, they know the local rules and regulations and how to maneuver around them. maneuver around septic issues, well issues, rules, that type of thing, HOAs. They know the appraisers and they know the agents involved, and all of that helps create a smoother transaction. Online lenders don't know the area, same with national lenders. So the other thing that tends to happen is if a buyer uses an online or national lender and they end up getting a pre-qualification letter instead of a pre-approval letter, which we discussed earlier, a pre-qualification letter takes long. Someone is pre-qualified, I'll say rather, takes longer to close because they then have to go through the pre-approval process. While it only takes a couple days, it can delay enough to cause a problem or a hiccup. Okay, what we mostly see is buyers with a pre-qual. They start the loan process once they're under contract, and the lender discovers some sort of hiccup or something that needs to be resolved, and then that takes a week or two. So, and that's what ultimately delays the closing. What docs do you need for a lender? Really, you need to meet with your lender and get this information from them, because it varies too much. It varies, especially if you're self-employed versus have an employer. Typically, you need W-2 or 2 years tax return statements, bank statements, for the pre-approval process. So after you have your pre-approval, that's when you start the home search. And the home search is a team effort. What we mean by that is both you and your agent are gonna participate in finding homes. We've learned that buyers have access, will come across homes online, driving around, that the agent isn't going to see, and the agent's going to find homes that the buyer doesn't see. Between the two of you, if you're working like as a team, you're gonna find the right home. So partner up with your agent on that. Send them homes that you see, and look at the homes that your agent sends you. The second item in the home search you need to know about is the MLS. MLS stands for Multiple Listing Service, and this is a group of people who have been qualified to enter data into the MLS, and it allows us to share information. We can look up sold homes, active homes for sale pending. This allows us to evaluate whether you're paying a fair price for a home or not using this data. It also gives us license to access the homes that are for sale. And what a buyer needs to know about the MLS is that there are going to be homes on the MLS that you're not going to see online. So it's an important tool. Also, the information on the MLS is entered by people who are qualified to enter the data on the MLS. So it's accurate. It's just more accurate. There's still mistakes on there, but they're innocent mistakes. You know, we always need to verify everything, but the information on the MLS is significantly more accurate than anything you're going to find online, and your agent should be able to provide you with a portal so that you have access to the MLS. So if you see a home online, you can go into the MLS and look it up, make sure it's active, get the information on the home, that type of thing. So the other thing with the MLS is that we have rules as agents that we have to follow. We often have to give 24-hour notice to enter a home. So instant viewing isn't always possible. Sometimes it is. It just varies, and we have to read the rules on the MLS for each individual home before we can schedule showing. The next thing is targeting. You need to target your home search. You need to pinpoint your home search, and this is accomplished during the home buyer orientation typically, and it kind of gets massaged and adjusted as you view homes with your agent. If you target the home search correctly and pinpoint what you're looking for, you're gonna find a home you want to offer on within 5 to 12 home viewings. If you get over 12 home viewings and you haven't found a home you like yet, you need to revisit your needs and what you're looking for, both for yourself and for the agent. So we have found that buyers can quickly find a home when their home search is targeted. A common dilemma, and I'm mentioning this because I just want to give you a heads up so you're not shocked if it happens. If you pinpoint your home search well, you may find the perfect home, the right home for you on the first day out. You know, we have buyers who find it on the first home and then they're nervous because they're like, oh my gosh, what's wrong? You know, what's the likelihood of me finding on the first home that I view? And it's actually fairly common. So, you know, don't second guess your thoughts or feelings about a home. If it feels like the right home, make an offer on it. Current market conditions. Geez, this is a hot topic right now. Obviously, the current market conditions are like nothing we've ever seen. We have an insane amount of home buyers and an insanely low, a historically low amount of homes available for sale. And this is creating a market where it really favors the home seller. However, if you do things well, you're going to find a home. You're going to find the right home, and your offer is going to get accepted. Be prepared. You may need to make a couple offers. You know, we're seeing 3 to 5 offers before the buyer is able to close. And you may fall out of escrow 1 to 2 times. Falling out of escrow is a rare event, but we're seeing an increase in homes falling out of escrow. And what that means is that a buyer gets into contract to purchase a home, and during the inspection period or somewhere else, they terminate the transaction and they have to start the home search all over. So, you know, the numbers on our current market, it's spring 2018, and we typically have 1,500, 1,800 homes on market in all of Kitsap County this time of year. Right now, we're hovering around 370 homes. So that's a historically low number. That's 20% of the inventory that we typically have. That means we have 80% less homes to choose from if you're a home buyer. So it becomes even more important to pinpoint what you're looking for. So you know it when you see it, and you're able to take action. And when you do find that home, make an offer, and make a strong offer. Okay, let's go to the next. Offers. Speaking of offers, let's discuss. I want to share with you there's 3 basic parts to an offer. There's the contract, which is what you see here. This is just a fake filled in contract, so you can see what it looks like. They're typically 15 to 25 pages long, and the second part of an offer is your pre-approval letter, and the third part is proof of funds. And we'll discuss those. The proof of funds is simply a copy of a bank statement or something. You can cross out your account number that shows that you actually have the money you need to purchase the house or the cash you need. So there are strong offers and there are weak offers. And in this market, if you're a buyer, every offer you make needs to be strong. A strong offer has a fair purchase price. Okay. Typically, homes are selling between 98% and 105% of list price. So, you know, if you're offering below that 97, 98% mark, you're probably not in the running. And you know, of course, the list price is subjective. I mean, my thoughts are always just make a fair offer. And you don't want to overpay. On the other hand, you don't want to underpay and keep shooting yourself in the foot. So a strong offer has a well-written contract, a pre-approval letter, and proof of funds. Weak offers have, typically what we see with weak offers are low purchase prices, lots of concessions. They ask the seller for lots of nickel and dime stuff, and the sellers just don't want to deal with it right now. The buyer may provide a pre-qualification letter instead of a pre-approval letter. We discussed that earlier. Obviously, a pre-qualification letter is weaker than a pre-approval letter. Another thing that we see with weak offers is they have lots of contingencies that are unnecessary. So you want to have some contingencies to protect you as a buyer, such as the inspection contingency, title contingency, so on and so forth. But weak offers will have lots of loopholes and obstacles for both the buyer and seller to jump through. So as far as making an offer in current market conditions, the way to approach this is you need to make your highest and best offer. Put your best foot forward right from the beginning. And this doesn't mean that you harm yourself. An example is we're seeing a lot of buyers that are overeager. They waive their inspection rights. And we never recommend that. Always keep your inspection. Now, something you can't do is shorten your inspection period. You got to make sure you have an inspector lined up to do this. Your agent can help you with that. But you know, there are things you can do within an offer to make your offer more appealing to a seller. And one of the smartest things I recommend is for agents to contact the listing agent that represents the seller and ask what the seller needs, and create an offer that meets the seller's needs, and you're going to have a higher likelihood of your offer getting accepted. So sometimes sellers need to close quickly, so maybe you offer a shorter closing. Sometimes they have some other needs, and the sellers will look at offers and accept offers that aren't necessarily the highest offer because the offer meets some needs of the seller that others aren't. Negotiation, obviously an important part of the home buying process. So negotiation is simply where the buyer and the seller advocate for what they need, and they may be start at opposing ends of the spectrum with those needs, but you just keep working towards the middle so that you can come to agreement. Negotiation is not slaughtering the other party. You know, that's going to work against you in the long run, because one of the things you need to do as a buyer in this market is make sure that you just don't make the seller so mad they don't want to deal with you. And that takes some tact and some skill and savvy, savvy to make sure that your needs are still addressed and you're getting what you need. Yet you don't want to ask for things that aren't absolute needs right now. You really need to be clear on what you need in the home sale and what can be basically provided as a concession to the seller, so that the seller feels that they want to continue to move forward with you. Once the buyer and seller agree to a purchase contract and they both sign it, then you have what's called mutual. It's also called signed around or under contract. And at that point, you're under contract to purchase your home, and you move towards inspection, which is the next slide. Okay. So you're going to see we have a sample inspection report here. So a home inspection is when a home inspector examines a home structure and systems. And the cost for this is typically between $400 on up, as we discussed earlier. There's several types of home inspection. You always need a general home inspection. We also recommend a septic scope or a sewer scope. You may need a well inspection if you're buying a property with well. And during the inspection process, the general home inspector may identify some other things that need to be looked at further, such as the roof or foundation, and that may increase your inspection costs. You may need to pay an engineer or a roofer to come in and inspect other items. So on inspection day, be prepared emotionally. Here's this beautiful home. You love the home. It looks perfect. And the inspector will find tons of things wrong with the home. That's their job. They want to inform you and educate you about your home, and they also want to identify any potential issue that could come up. So inspectors tend to take an overly cautious view. They're going to notify you of too much versus not enough, and this is good. You need to keep your wits about you and realize that that's just part of the process. We always joke with our buyers that the home inspector is going to make the house sound like junk. It's overwhelming the amount of things that they're going to find. What you want to do is, if it's a small item, go, okay, welcome to home ownership. I'm going to learn to caulk the window, and simply filter the inspector's information and identify the non-negotiables, the things that you're not willing to live with, the things that the seller needs to address, or that you're going to need some sort of discount on, that type of thing. And when it comes to the next step, which is the inspection response by the buyer, that's when you address the non-negotiables. And we recommend, actually I'm gonna skip to the inspection response now, because we'll cover what I was going to say here. The inspection response is where the buyer sends notice to the seller of what they want addressed that came up in the home inspection. And it's really important here that you don't become your own worst enemy. The way to do that is to identify the non-negotiables, and the small stuff you're gonna need to take care of on your own. And you're buying a used home, not a new home. There's going to be a ton of small things and problems with homes, so simply identify the non-negotiables. Now, the inspection response process goes like this. The buyer sends their notice to the seller of what they want repaired. The seller then responds and says, yes, I'll repair that, or no, I won't repair it the way you're asking, but I'll do this instead, such as giving you money at closing for it, reducing the purchase price, or some other solution. And the third response is that they can just say no. Okay? Then the buyer has one more chance to respond to the seller. And typically they only have one more chance, and that's what I would expect. That's what I think you need to expect. So buyer has one more chance to respond to seller saying, hey, we need this done this way, here's our proposal, responding to the seller. And it may be, one of your responses may be that you accept what the seller has proposed. Then the seller has one more chance to say yay or nay, and if you can't come to agreement, then the transaction is terminated and the buyer has to go back to searching for homes. If you do come to agreement, then what's happened is you have what's called mutual on the inspection period, and the inspection contingency has been met, and you're moving forward to appraisal. So appraisal, here's a sample appraisal report. If you can avoid reading those, I highly recommend it, although they're interesting. So what's appraisal? Appraisal is when an appraiser comes and examines a property to determine fair market value. And what appraisers do is they determine fair market value. They write a report on that. This is the report that you're seeing here. It's many pages long. And appraisers also take photos of the home, and they identify repairs that need to be made in order for the loan to be processed or closed on. So your lender's going to order appraisal for you. Issues that can come up in appraisal are low appraisal, which means the appraiser determined the value of the home is less than your purchase price. In that case, there's three options that typically happen. Either the buyer brings cash to the sale to bridge the difference between the appraisal price, and the purchase price. The second option is seller lowers the price, which is unlikely in this market. And the third option is that the buyer and seller bridge the difference. So seller may lower price a bit and buyer may bring some cash. So if the buyer and seller can't come to agreement in the case of low appraisal, then the transaction is terminated and the buyer gets the earnest money back. If you had a financing contingency with your purchase and sale agreement, which you should. The other thing that can happen with appraisals is that the appraiser identifies repairs that need to be made, and this is fairly common. Most sales we see repair requirements come through. Those are called work orders. And in our experience, mostly sellers will take care of the work orders. They don't have to, so a buyer needs to know that and be prepared for that. But these repairs absolutely need to be made, or the lender will not be able to loan on the property. The ideal situation is that your appraisal comes in at value or higher, and there are no work orders. And in that case, once appraisal is resolved, and then we go on to the next part of the process and the final part, which is the events that lead up to closing. This is typically a slow time for the buyer. There's lots of waiting. The buyer's wondering what's going on, and here's what's going on. what's going on is escrow is collating documents. They're making sure everything's paid correctly. Money's going to go into the right place and the right people. That title is clear. And so there's a lot of behind the scenes paperwork going on. And your agent's monitoring this process. So the buyer's not going to hear much during this time. Just be patient. And it's to be expected, part of the process. The next step is typically, 3 to 5 days before closing. You want to do a final walkthrough with your agent, and it doesn't take long to do a final walkthrough. You simply walk through and make sure the inspection items were addressed. You can bring your inspector and have them recheck the items for you, and you make sure the home is in the condition that it's supposed to be in for closing, so there's no surprises. The final walkthrough is very important. Then you typically will sign, I should reverse these. You're going to sign closing documents after your final walkthrough. It typically goes pretty fast once the final walkthrough starts. You'll do your final walkthrough. The next day you might sign the closing documents at escrow. And then the next day they might fund the loan, or within a couple days of that, fund the loan, which means the lender wires the money to pay for your house to escrow, so escrow can then pay the seller on closing day. Once all documents are in and everything's signed and lined up to close, the escrow does what's called release to record, and recording and closing are the same thing. So when escrow releases to record, what that means is they've sent the documents to the county. They release the documents so that the county can record, release to record. And once the document records those documents, which means they're literally transferring title from the seller to the buyer, so the buyer becomes the homeowner. Once those documents are recorded at the county, then you are recorded and officially closed, and you will get the keys. So that is a rundown on the home buying process. Again, Stephanie Dupuy with Dupuy Team at Keller Williams, West Sound in Silverdale, Washington. If you have questions about this, you can call our main line at 360-930-9609, or you can call my cell at 360-440-7237. I'd be happy to address any questions you have. You can also text us, and if you'd like a homebuyer orientation, I'd be happy to walk you through that, and we hope you found this helpful. All right, thank you.